Welcome to Grounds for Discussion
and Title Talk,
where we bring together closing, processing, real estate,
and coffee, of course.
Whether you're a buyer, seller, agent, or fellow industry professional, join us as we unpack the processes that make real estate deals happen. Hi, I'm Jennifer.
And I'm Barbie.
And today we have the Capital Access Specialist, aka your friendly neighborhood lender, Derek Chaney.
Oh, I like it.
And rolling. Yeah. Well, welcome. We're super excited to have you today. You want
Thank
to tell
you.
us just a brief snippet about Derek Chaney?
Yeah, well, I'm going to have to add friendly neighborhood lender to my business card.
Apparently.
I think one of your previous guests will probably like that. But yeah, no. Derek Chaney grew up, about an hour north of town here. On a dairy farm, and so my whole family, they live up there, and so I was kind of the black sheep of the family and decided to move to the big city.
Oh boy.
So been here since college, since high school, and then I did some financial planning right out of college for about 3 years. Didn't really love it, so I was looking for something else to do, and luckily Mid-Missouri Bank was starting their mortgage team at that time, and so I interviewed for the position, and they were looking for somebody green, luckily, and so I told them, I was like, hey, you're not going to get anybody greener than me. I have no banking experience, not even as like a teller, so I was like, if you want to hold my hand for a while, I was like, I'll be more than happy to join the team, and so I did, and sure enough, they probably had to hold my hand a little bit longer than they expected, but yeah, it all worked out from there. I moved into a couple different roles on the mortgage team. And, now I'm currently senior vice president and sales manager of our mortgage team. So that's where we're at. And
Awesome.
And you've been with sorry if I missed it, Mid-Missouri?
Been with
how long?
Mid-Missouri. Let's see, January will be 10 years. So yeah, almost a decade. So that's kind of crazy to think about that it's been that long.
Yeah. So you just mentioned Cool Cats say Midmo
Oh,
or MMB.
Yeah.
Missouri if you're
Yeah.
real strict.
Yeah. You can tell if somebody's not real familiar with our bank because they'll say Mid-Missouri Bank, but all the cool kids, they say Mid-Mo. Within the bank, we just say MMB for even shorter. So if it gets any more short, I don't know what we'll call it, but we'll figure it out from there. So.
Well, before we really dive into it, I feel like you missed one thing on your list of things, maybe. Did I read you are a microbiologist?
Oh, yeah.
I was real scared there for a second.
I was
did
too. I was like,
read
wait a
something
minute.
wrong?
Yeah,
So is
yeah.
that how you, did you ever
That's
do
how I got into lending. Yeah. Well, okay. To kind of explain that. So actually, whenever I went to jury with the intent of becoming a doctor.
Okay.
And so I did the whole pre-med route. You have to take a bunch of science classes for that, and so I went ahead and majored in biology and chemistry. Then by my end of my junior year, I'd taken my MCAT and all that, and decided I was done with school. Just wanted to go out and get in the real world, make money, do my thing. But in the meantime, while I was getting my degree, I was working at a lab here in town and got certifications to be like a microbiologist and was running tests
so
on
interesting.
different things. So it was interesting work.
Science, finance.
I mean, obviously
it kinda.
smart with
Yeah.
a capital S.
Yeah.
So when I showed Jennifer, I was like, we're going to talk about one thing and we're not going to tell him. And I showed her she was like, really?
Yeah.
I was like,
Yeah.
oh, that's
Are you
so
sure?
interesting. Yeah,
Yeah,
I know.
so-
And just for a second, I was like, I don't know if I am sure now.
Yeah, so actually I graduated jury with a biology and chemistry degree, but ever since I've been done with jury, I've been in the financial world. So
Okay, well, what did
kind
you bring us to drink today? It looks kind of fancy.
Yum.
yeah, it's not that fancy. It's pretty simple. It's just
pretty.
it's just
It
a
is pretty.
cold brew from Architect Coffee with some sweet cream added on top there. So
And it's like frothy.
frothy.
Is that what that is?
Yeah,
Okay.
yeah. Looks
We're
looks
gonna
like
dive
it.
in. I'm gonna try it. She's gonna try it, and then we'll
Okay.
It's really pretty.
She hates it, doesn't she?
No, it's better than a
I like it.
cortado.
I don't know if I've had one of those.
That was our second guest brought us a cortado, and that was an espresso shot with cream in it.
Oh, okay. Interesting.
So, yeah.
Interesting.
And it was,
There's no cream.
There's no.
There's no cream.
Light on the cream. Got
Supposedly
it.
there is
Okay.
cream.
Okay.
supposedly.
Okay. Well,
So-
I might have to avoid that
All right.
one
Well,
then.
this is good. Cheers.
All
Cheers.
right.
So much.
Cheers. Thank you, ladies. I
An
appreciate it.
interesting afternoon with Barbie.
Yes, yes, it will be. So we have all the questions like usual.
Okay.
Because we're really good at that. So what are some misconceptions that people have about lenders or loan officers?
Yeah, there's a few, but one that I get a lot from clients is, why are you asking for all this documentation? Why do you need all this, right? A lot of people don't understand that, we comb through your whole application and basically have to verify everything that you have on there, that you put on there, with income, we got to get pay stubs, W-2s, have you been divorced in the past? Okay, now we're going to have to collect divorce decrees and show that either
Yes.
you do pay child support or you receive child support. And so we get that question a lot is, why are you asking for these things? And again, it's just because we have to verify everything, double, triple check all of it, make
Yes.
sure that, everything is right, because it's going to get caught along
Yeah.
the way in underwriting. And so if we can collect a lot of that up front and prevent those issues or speed up the process, that makes it a little bit easier.
So you're basically want to make sure, like when they say, "Oh, I just have one car loan," it's really one car loan and it's not 6 car loans.
Right. Yeah. Or another one too, like if somebody owns a property free and clear, a lot of times they don't even mention that to you because
Yeah.
I don't have a loan on that property. Why do I
Yeah.
need to bring it up here? Well, you do have to pay taxes and insurance on that
Insurance on that,
property, so we
yes.
do have to factor that in. So,
Exactly.
So yeah, the more information that we can get on the front end, the better.
Okay, that makes perfect sense.
Yep.
So tell us about some red flags that you look for when someone, puts in a loan application.
Yeah.
What is like right off the bat you're looking at it going, oh boy.
Yeah. I mean, there's a few key things there that we look at. The big one's going to be your credit score. What's that popping up as, and that kind of determines how we're going to go with the different types of loans. Another big one is debt to income ratios and how close they are to the limits as well. And then another one too is down payment, and if they have a down payment, great. If they don't, we work with that as well too. But where's that down payment coming from? Do you have that money in the bank, or do you just think it's going to magically appear between
Or
now
is it
and
in
closing?
Is it in your mattress at home?
Yeah, and so normally credit, debt to income, assets that they have in the bank. Those are big ones. And then another one we kind of look at too is job history / income, and how does that break down?
Yeah.
Are they just paid a normal salary? Okay, great, that's easy. Are they self-employed? Okay, we have to dig a little bit deeper in that.
Is there a minimum amount of time you ask for people to be on the job?
It depends what type of loan they're doing.
Okay.
Yeah.
Okay.
So some loans require certain periods of time that they have to be on those jobs. Other
So a
ones not as
typical
long.
conventional loan, they could switch.
And it depends how they're paid at that
I
job
was
as well
asking
too.
someone the other day, like, how do people move to a new state and immediately get a home loan
Yeah.
because they've gotten a new job?
Yeah. Normally, if they're paid, a salary,
Yeah.
we can instantly
So
count
that'll-
that
okay.
income. Now,
Okay.
if they're paid commission, have they received commission in the past? Is it the same industry that they're moving to out there? Is it the same employer, just different position? I mean, there's a bunch of different ways that they can do that. It really just depends on, what they're doing for work and how that income breaks down.
Okay.
So something that I'd like to talk about as a escrow officer, I can't tell you how many times I'm in the closing and I'm having to explain escrow.
Yeah.
Escrow, no matter, we sometimes surface talk about escrow, and people, especially first-time home buyers,
They know
really-
it exists, they've heard the term, but maybe don't.
but they don't
Sure.
really fully
Understand.
understand it.
Yeah.
So I'm going to let you explain that to us.
Yeah. So how do I explain it to my borrowers?
Yes.
Really, so the simplest terms that I explain to people is basically your monthly mortgage payment, right? It kind of falls into two buckets. You have your principal and interest portion of that pays for your loan, but then you also have your escrow portion of that. And that money just goes into a separate bucket so that whenever your taxes come due at the end of the year, there's enough money sitting in that bucket that the company holding your mortgage can pay for your real estate taxes, and you personally don't have to cut a check for that at the end of the year. Same thing with your insurance. Whenever it comes due, again, you've been putting money in that bucket each month as part of your monthly mortgage payment. Well, there's enough money in there now to pay your homeowner's insurance at that point. So again, that you're not having to either write a check each month for your insurance or pay for it once a year. Again, it's a tool that helps a lot of people budget. So again, that they don't have to write these big checks whenever those bills come due.
And in December, when Christmas rolls around, you're not having to pay real estate tax. Your personal property tax, of course, still got to pay that.
That's right.
And I've had to say that a couple of times. Oh, I don't have to pay
Oh.
taxes.
Yeah.
No. Real estate tax.
I like that positive spin on that. I might have to steal that from you. So that's good. That's good.
Pay your personal property, just not real estate, and you can have Christmas.
Yeah.
And the other thing I feel like on escrow is people don't understand is really homeowners insurance you pay up front, and taxes are in the rears.
Yep. Yep.
Of how our state runs. We
Right.
pay taxes for the prior year,
Right.
not the year coming up.
Right. Yeah. Yeah. And each state does a little bit differently there. But yeah, there's always some confusion about that. And the other thing too about escrow, I think that some people don't understand is, if you put less than 20% down, you're required to have an escrow account. You don't really have the option. Now, if you're putting 20% down or more, you can choose to escrow or not. Most people do elect to escrow just because, again, like we're talking about, it's easier to budget that way.
Exactly.
So,
Exactly. So what we've done is we've paid the homeowner's insurance for the year, correct?
Yep.
On
For the next 12 months.
For the next 12 months. And then each month, when you make that house payment, you're making your principal and interest, like you said, and then also that additional escrow payments.
Yep.
And it kind of divides out.
Yep.
So because of escrow, do you ever see a difference in your home payment?
A difference in your home payment, like
Your
from-
mortgage payment each month, like say, I'm starting out at $1,000, I'm making my mortgage payment. It's $1,000 even. Is my payment always going to be $1,000?
Good question. Good question. So
People.
it's if you're fortunate, it will always be $1,000. However, most of the time, and in most places, your real estate taxes are going to increase, and more likely your homeowner's insurance is going to increase as well too. So your monthly payment will slowly increase, each year. And a lot of places, mortgage servicers that hold the loans, they do an escrow analysis at the beginning of the year, and they let you know, if you're going to be short funds to pay out the taxes and the insurance. And normally they give you a couple options. They say, hey, you can increase your monthly payment by X amount, and that'll catch your escrow account up so that we don't have to come back to you for more money. Or you can keep your monthly payment the same, and then just write us a check for X amount of dollars, and then your monthly payment will stay the same.
Yeah.
But we'll have enough money again in that escrow bucket to pay out those taxes and insurance, even though they have increased over time.
Gotcha.
Yep.
In your 10 years, I always like to ask this: funny, interesting, wild, crazy, dumb things. What has happened to you in your
All the above.
10 years?
All the above. That's the best thing about lending and just real estate in general. I feel like a lot of the things, whenever they happen, they're not funny in the moment because everybody's like, trying to get the
Tense
deal
and high
done, and
anxiety
they're high strung in the moment, a little stressed out. But just some silly stories, I guess I've had over the years. You guys are familiar with in the beginning of the process, we send out an initial loan estimate that shows, what your estimated monthly payment will be and estimated amount that you'll have to bring to closing. Well, normally the way that I do it, I always have that initial amount that they have to bring to closing being a conservative amount. Normally it's a little bit higher than what they really have to bring. Well, I had a client, when we got to closing, he ended up having to bring in, a decent chunk less than what I initially told him. Well, he got upset at us because he was having to bring less money into closing because of that.
Like what do you mean? He was mad that he didn't have to pay that?
Yeah. He was. I got some mean phone calls prior to closing because he saw that, and I was a little
Taken aback.
Taken aback. But that was one.
Usually it's the opposite. It's like,
Yeah.
you told me I only had to bring in $5. Now I have to bring in $100.
Yeah.
Well, yeah, and typically that's an easier conversation if that number goes down, and so that's kind of why we typically do that. The other one had a couple. They were refinancing, and we got the appraisal back. The appraisal came back lower than what they expected, it to be. And they called me up and they told me that their home should be worth significantly more money because
Classic.
there is a sinkhole right behind their house, and so nobody can build a home right behind their house. So therefore, they have more privacy. So their home should be valued higher.
Oh, no.
And then you're like, oh, really?
Oh,
I'm like, I don't think that's how that works. I mean, we can try to pitch it, to the appraiser that way, but I don't think he's going to change his mind. So
So the wildest thing we kind of hear from a lender perspective and things falling apart is someone goes out and buys something.
oh yeah,
Like
Buys a car,
finances
buys a boy,
furniture
boat.
or
Yeah,
something. Does
yeah.
that happen that often as much as we hear about it?
I would say, again, a lot of it has to do with your prep work on the front end. So that's something I've learned over the years. Again, the
Communication.
more information that
Yeah.
you can give the borrowers at the beginning of the process, the better it's going to be. So that's something, as soon as somebody gets under contract for a home, I tell them multiple times in person and in emails, like, hey, don't make any large deposits into your bank account. Don't put anything on credit. Don't go out and get any new loans. We have a whole long list of things that we tell them not to do.
Right.
Most people do listen to us on that, but we still have a few people that, will go out and get a car loan just because they needed a new car to match
Yeah.
the new house,
Oh, my.
and so it does
I
happen.
hear about the furniture. Like, I've got a new house.
Yeah.
I'm gonna go get new furniture,
Yeah.
and then
Yeah.
they finance it.
Oh,
or
yeah.
Something crazy.
Yep.
Yeah.
And that can really cause it to
Yeah.
fall apart, right?
Yeah, it can. And if that's something that, you feel like you just have to do when you're buying a home, get
Just
with your
communicate it.
lender. A
Yeah.
lot of times we can factor in, what that payment's going to be and if that's going to affect your approval or not. Now, kind of the bad thing is too, depending on how quickly you're doing that to closing, is we do have to get documentation showing, how much that loan is that you finance for the furniture, what the monthly payment actually is, and we have to get all that before
Yeah.
closing.
So he's saying at 9 a.m. when you do your closing, at 10 a.m. you can go buy
Go
furniture.
buy furniture.
buy
then.
furniture, you can buy a
The
car,
same day.
Whatever you
whatever you want to do, as long as it's after closing.
You sign all your
After
documents.
we get that clear to close, we are fine.
All right, and in closing, tell us your best or favorite piece of financial advice to tell your borrowers.
Yeah. Well, I mean, the big thing is if you're thinking about buying a home in the next 6 months to a year, I mean, get with the lender, get pre-approved. That way, if you are going to get pre-approved, then great. You're good to go for whenever you decide to start looking at homes. Maybe there's a couple things that you need to work on, whether it's credit or it's, paying down some liabilities. Okay, great. We have a few months that we
Get a
can work
plan.
on these
Yeah,
things
yeah.
and get all of our ducks in a row so that whenever you do find that home that you just love, well, we're good to go and
Yeah.
we can write an offer on it.
And I like that you're here, that somebody can walk into your building and say, hey, I think I want to possibly buy a home in the next couple of
Or
years.
get
Yeah.
you on the phone.
Yeah.
I just need to get you on the phone
Yeah.
sometimes.
Yeah.
You know what I mean? Instead
Conversation.
of, can't get anybody on the phone. We cannot, and I'm sure you
Yeah.
cannot stress enough local lender.
Oh, absolutely.
It's massive.
Oh yeah,
Yeah.
it makes a huge difference. And too, like when you're writing offers on homes, realtors, listing agents, they pay attention to that.
Absolutely.
So it can make a difference.
Yes, sir.
So,
they do.
yeah,
Yes.
Well, Derek Chaney, mid-mo, because I'm a cool cat.
that's right.
Where can they reach you?
And then B.
Well, you can reach me, on our website or my personal website, applytoderek.com, or you can call me directly, 417-986-8468.
Thank you so
Awesome.
much.
Yeah, thank you, ladies. I
Derek. This was
appreciate
fun.
it.
Appreciate you.
And this was a very nice drink.
It was
is a
very pretty,
nice
wasn't
drink.
it?
Yes,
It
it's
is
very
lovely.
pretty.
And I need to get a spoon for that sweet cream. Anyways, thank you guys
Thank
so
you.
much. See you
Bye.
next time.